Asia stocks combined. China cuts charges as data disappoints. Sydney Asian shares have been mixed on Monday after China's crucial bank trimmed key lending costs as a raft of economic statistics missed forecasts and underlined the want for more stimulus to guide the arena's second-largest economy. Retail income and industrial output each rose by means of much less than anticipated in July, adding to a disappointing reading on new bank lending. The cut in rates helped cushion the blow a bit and left Chinese blue chips steady, while the yuan and bond yields slipped. These are further signs and symptoms that the post-Shanghai lockdown boom leap is weakening hastily, stated Alvin Tan, a strategist at RBC. Monetary policy is dropping traction except probably for the trade price, with exports being the only bright spot in the economic system. MSCI's broadest index of Asia-Pacific shares outside Japan become flat, having bounced 0.9% ultimate week. Japan's Nikkei rose 1.1% as facts confirmed the economy grew an annualized 2.2% inside the second quarter, just a touch underneath estimates. Investors stay worrying to peer if Wall Street can sustain its rally as hopes U.S. inflation has peaked may be tested with the aid of probable hawkish statement from the Federal Reserve this week. The FOMC minutes on Wednesday need to strengthen the hawkish tones from latest Fed audio system of being nowhere close to being carried out on charges and inflation, warned Tapas Strickland, a director of economics at NAB. Markets are nonetheless implying around a 50% danger the Fed will hike through 75 foundation factors in September and that fees will rise to round 3.50–3.75% by means of the stop of the 12 months. Hopes for a soft economic touchdown will even get a health take a look at from U.S. retail sales information that are predicted to reveal a pointy slowdown in spending in July. There is likewise a hazard income from predominant outlets, along with Walmart (NYSE), WMT, and Target (NYSE), TGT, will be laced with warnings about a downturn in call for. Geopolitical risks stay high with a delegation of U.S. lawmakers in Taiwan for a two-day ride. EUROSTOXX 50 futures introduced 0.4% and FTSE futures rose 0.5%. S&P 500 futures and Nasdaq futures had been both down around 0.2% after last week's profits. However, the S&P index is nearly 17% above its mid-June lows and only 11% from all-time highs amid bets the worst of inflation is past, at the least within the United States. Peak inflation, the leading indicators we have a look at provide guide for moderation with easing deliver pressures, weakening call for, collapsing cash supply, declining costs and falling expectations, said analysts at BofA. Key additives of headline inflation, such as food and energy, also are at an inflection factor. Both Wall Street and Main Street now expect inflation to moderate. The bond market nevertheless appears to doubt the Fed can manufacture a smooth touchdown, with the yield curve still deeply inverted. 2-year yields at 3.26% are 42 foundation factors above those for 10-year notes. Those yields have underpinned the U.S. dollar, even though it did slip 0.8% in opposition to a basket of currencies last week as chance sentiment progressed. The euro become holding at $1.0249, having bounced 0.8% last week, though it shied far away from resistance round $1.0368. Against the yen, the greenback steadied at 133.23 after dropping 1% remaining week. USD. Our feel stays that the greenback rally will resume earlier than too long, argued Jonas Golterman, a senior economist at Capital Economics. It will take loads extra suitable information on inflation earlier than the Fed modifications tack. The minutes from the closing FOMC meeting and the Jackson Hole Convention may nicely push back similarly in opposition to the notion that the Fed is pivoting. The pullback within the dollar supplied something of a reprieve for gold, which turned into holding around $1,794 an oz, having won 1% remaining week. GOL. Oil expenditures eased as China's disappointing facts introduced to worries approximately worldwide call for fuel. The head of the world's top exporter, Saudi Aramco, Tadawul, 2222, mentioned it is prepared to ramp up output while production at several offshore U.S. Gulf of Mexico structures is resuming after a brief outage ultimate week. OR, Brent slipped 99 cents to $97.16, at the same time as U.S. crude fell 89 cents to $91.20 consistent with barrel.